All right, how not to manage your day trades. That's basically what this video is going to be about. If you're new to day trading, pay close attention. I'm going to show you the mistakes I make and why you should really avoid certain things when you're trying to start day trading. But basically, just I'm going to show you exactly what went wrong for me today. So first off the bat, managing your day trade. There's two parts to day trading, really. One is identifying trades or identifying stocks that are moving in certain patterns that fit certain strategies. So basically, identification is the first part of day trading. So that's really, I'd say, I don't want to say easiest, but that's the one that most day traders or people getting into day trading can get under their belt pretty easily, is identifying them. The problem is managing the trade, and it seems like that should be the easy part of day trading, but it's not. It is I think more important than actually identifying stocks that are moving in certain patterns, because even if you make a mistake and enter a trade that really you shouldn't have, you can manage it to a point where it doesn't hurt you. But really what happens is most of the time new day traders fail because they mismanage their trades for one reason or another. And I will show you how I did that today with two trades that were both actually should have been winning trades, and I ended up basically flat on them, just tiny little profit because I mismanaged them. So I will show you that here. This is a stock also that I wish I had gotten into, BMIS. I was watching it here. I saw how it consolidated below VWAP. I was waiting for it to jump up, but I was busy with another trade and I missed it. I wanted to get in right around here at 58.88. It's all the way up to 59.78. It's almost a whole dollar. So anyway, back to mismanaging trades. My first trade that I mismanaged was Nutrien Limited. This is a chemical company. This showed up in my where is it? My wedge scan. So this is a trade idea scanner that I designed that looks for stocks that are moving up with a certain specific amount of volume and certain average volume. And moving in a certain pattern. Basically, it's looking for them to move up along VWAP with the 200 moving average. This is not 200 daily, this is just a 200 simple moving average on a 5-minute chart. So basically, it's looking for stocks that are moving up along that and creating this little wedge. And a lot of times, eventually, it pops. And once it pops over that 200 moving average using this VWAP, the purple line, as support. So the stock that I saw here, I saw a few, there's a couple I missed today. That I really wish I think roll was another one. Yeah, see, it kind of created this wedge, and then look, pop from 37.63 all the way up to 38.23. So pretty good pop right there. But I didn't take that trade. So it triggered at 11:10. So right here, and I got in right away. 11:10 popped up over the 200 moving average, right? Had a nice little wedge action, then boom, popped up. I got in here at 53.65. And it started moving up, right? And then a nice little pattern. And actually, I'll show you once I got into it. I was watching this 8 EMA and the 20 SMA, which is used together as a really good moving average to day trade with. So I was watching it move up, and then what happened? It kind of topped here, and then it broke down through the 20 SMA, the red line. So it broke down through both the exponential moving average, the orange line, and the red. So I said, all right, I'm out, because I think it was going to, but look what happened. Busted right back up and went all the way up, and it got up to over, I think, 50 cents over where I entered, which is a pretty nice trade, except I didn't stay in it because I got deked out right here when it just broke through. What I should have been doing, which I was doing when I was in this trade, is I should have been moving my stop up just incrementally. And one of the problems that a lot of day traders have is they think, well, I got to put my stop right above where I got in so that no matter what, I'm not going to make out with a loss, which is really, you don't want to, have any kind of loss on a trade. It's true. But if you get stopped out too quickly, you miss out on this little leg up here, this could have made my week right here. So essentially, I got out here at 53.70. Which was just 5 cents over where I got in, right? Sure, I didn't lose anything. I made a little money, 5-cent gain. With 100 shares, it's $5. 1,000 shares, it's $50. Whatever. That's not bad, right? Well, no, because look at how much more it went up. So really, I should have been moving my stop up just along either VWAP, or I should have had a bigger buffer here and not jumped at the chance to get out here when it broke through, because it could have, unless it continued on, that's when you get out. Otherwise, you wait and see what it does here. Sure, it broke through it, but then it popped right back up. It was pretty quick. So it deked me out, and I missed out on a really nice trade here. So managing your trade is so crucial. A lot of day traders, I think, do this because they're afraid of losing, right? People talk about fear of missing out, fear of whatever, but I think they're afraid of losing. So they think any chance they can get to put a stop above where they got in just to make sure they don't lose anything, you know, they feel safe that way. And the problem is you lose out on a lot of really nice winning trades. So I had been moving my stop up when I got in here incrementally, a lot below the 20. And then I just tightened it up when I got here to right below the 20, and I got out right when it hit it. I should have had it below, like these bottoming tails. You see this bottoming tail right here, 53.68 was the bottom. I should have kept it right at below that, and I would have stayed in. But instead I just moved along the simple, and remember, these are just averages, so these are not, even though these stocks tend to follow these patterns, they can occasionally bust through them really quickly and then come right back, and that's exactly what happened here, and it screwed me over. So that was a mismanagement right there on Nutrien, unfortunately. And I had another mismanagement, my second trade, on RLGY Holdings Corp. So it's a real estate company. Now this was I'll show you on the yearly moving average. This was something that had been moving a lot. I think it had earnings yesterday, so this was yesterday, big gap down from the day before, and it gapped a little bit down today. So I was keeping an eye on it as it was moving down. I almost got in on a short right about here, at around 946. I could have put my stop above VWAP maybe, but I don't think I could. I didn't get filled because of the uptick rule, which was kind of hard to get filled. So 946, I could have ridden it down to about 983, which would have been nice. But instead, I was watching this while for the bounce, and here's where I'll show you on the ADMA. So look at this big green candle here after it hit bottom here, and on a 15-minute chart, you can see that's kind of a bullish engulfing. And then it had, if you see, these are kind of hard to see, but you look here, you can see that they had two indecision candles on the 15-minute too. So right here, came back to the ADMA and kind of held on to it, bottomed out a little bit, a little bottoming candle, a little red candle, then came back. And then look what happened. This is where the 8 and the 20 are so crucial. A little cross action right here. I got in right at the cross. I got in at, what was my entry? $9.03. So I got in at 903 and it shot up quickly and then held the 8, right? Now look at this. My first target, I kept these lines to show you. I wanted to get some out at 924, right? And then what happened? It kind of moved up and it had this little yellow indecision candle. What that little candle means is the buyers tried to bring it up and it came right back to where it opened that 5-minute period. Sellers trying to bring it down, it came right back. So that's what's called an indecision doji. What happened after that? It started dropping. So I moved my stop up again because I was afraid of losing any money on the trade. I wanted it to be a successful trade. And I put my stop, I actually put it above this 20 SMA. And it came back, stopped me out, and then look what happened the rest of the day. Sideways action. Boom. Hit my first target, hit my second target. But I was out completely here. So almost the exact same thing that happened to me in the other trade. And it's fueled by that fear of really having a losing trade. But you can't, this is really a key factor, and I have trouble with it even after many years day trading now. And I'm just slowly starting to get better at it. You can't look at it as, you really shouldn't be looking at your P&L, your profit and loss dollar and cents as you're trading, because you should be looking at it in terms of actual point gains. You know, like if it goes up 20 cents, right, that's 20 points, we'll just call it. Because if I had just moved my stop up gradually instead of quickly moving it up when I saw it dropping here, I could have stayed in this trade and gotten out at my targets. So the fear is that I don't want to see any kind of red on this trade, right? It's already up a significant amount. I'm afraid that it's going to come back and I'm going to miss out. So what I should be doing is just moving my stop up slowly, right? And even if it comes back, I can reduce my risk. It's called reduce risk. My first stop was 894. If I had moved it up just gradually, right? See this little bottoming tail, maybe moved it up right here to 903. I mean, that's where I got in, actually. I got in at 903. So if I'd moved it up there instead of all the way up to 911, then what would have happened? I would have stayed in it, and then I could have gotten out at my targets. And even if it came back and hit 903, I would have lost a little bit maybe on commission or whatever, but I'm always looking to keep that trade green, which is really in the end you end up shooting yourself in the foot because you end up keeping it green. Sure, I made a little bit because I got out here at 9.10 and I got in at 903, a 7-cent gain. So I made a little bit of money on this trade, but it went all the way up to 938. I could have made a lot more. And over time, these kind of mistakes, this mismanagement, will eat into your winnings, because you really should be making out, you should be letting your trades run. It's just that fear of it coming back down and stopping you out for a loss always kind of messes with your head, but you have to be willing to take a loss. And really what you should be looking at it too is in terms of limiting your loss. So I could have, my original stop was 894, right? And a 2-to-1 reward to risk was 924 because it was a 10-cent buffer I had. So I wanted it to go up 20 cents in order to make a 2-to-1 reward to risk ratio. And just the slightest little bump up of my stop, even if it comes back and stops me out, if it stopped me out below where I got in at like $9, it's such a small loss that's fine, because if it had gotten down below this 20 SMA that much, it's probably going to be a loss anyway, and I probably reduced the amount that I was going to lose. But here, moving it up too high like this, it's gonna you're risking getting stopped out before it has any chance to move. So you have to let your trades breathe. So those were the two that I really mismanaged. I was really, really upset about them, but that's the lessons you learn when you day trade. It's going to happen a lot, and these kind of hurt almost as much as just a bad trade where you lose money, because I know how much more I could have won. And so, yeah, so it was a kind of a crappy day for me, because I just knowing what could have happened with this trade and with Nutrien, just could have had such a nice day, and it turned out to be kind of flat. So yeah, so just lessons for day traders. Don't, let your trades run, and you have to manage those trades really carefully. So that's it for today. It's Friday. I'll be back on Monday, hopefully, with some better managed trades to show you.